How can you get the loan amount you want at a small cost in a commercial loan bid? Let's analyze in detail. We consider two main aspects: determining the total supply and demand of funds, and knowing exactly who needs a loan and how much to lend based on orders. We then elaborate on the above 2 points. First, let's discuss the total supply of funds, and we assume that there are only 8 manufacturers in the whole country. 4 home appliance manufacturers, 2 automobile manufacturers, and 2 steel manufacturers. Total commercial loan supply is equal to estimated total loan minus able funds plus net money supply. In the software system, select Government, click on View Data, click on Periphery and Measures. We can view the total expected loanable funds for the third year at the peripheral data, $52,635,000, and the total new money supply for the third year from the government measures, 0. So we can conclude that the total commercial loan supply is 0 plus 52,623 is equal to $52,635,000. The second point is, how do you determine the total demand for commercial loans? Because inter-vendor capital transactions are not counted in the total national capital requirements, it only depends on the manufacturer's production needs to spend funds on the periphery. So, total commercial loan demand is equal to labor expenses plus iron ore plus VAT plus advertising plus technical renovation plus usury plus commercial loan 3 years ago minus cash balance. Okay. How to calculate the amount of each item in the total demand? Assume that the conditions remain the same. We analyze in the above order. The first, labor expense calculation. In the software system, select Order Bidding, select Details of Bidding, Results, select the second and third year. We view from the order bidding results of the third year of orders compared to the second year. The amount of growth in orders for cars is 0. The amount of growth in orders for home appliances is 2,000 units. In the software system, select Labor Bidding and click on Capacity Calculation Year. Using the capacity calculation, we know that when the order increases by 2,000 appliances, we need to put in 90 more workers and pay 17% overtime. So, our overtime increase is equal to 340 multiplied by 17% minus 270 multiplied by 0% multiply by salary. Does the total demand for workers change when orders remain constant? Let's assume that the conditions remain the same. Because our production line depreciates 5% of its capacity each year, we find by capacity calculation that the increase in the number of workers at the same capacity as the previous year is equal to 290 minus 270 is divided by 270 is approximately equal to 7.41%. In the software system, select Labor Bidding, click on Bidding, click on Details of Bidding, Results, select the second year. We know from the labor bidding results that total worker demand in the second year is equal to 2,620 persons. Then total worker demand in the third year is equal to 2,620 plus 2,620 multiplied by growth rate of workers. Due to capacity depreciation 7.41% plus order growth increase workers by 90, is approximately equal to 2,905 persons. Further, it is concluded that total worker demand increase in the third year is equal to 2,905 minus 2,620 is equal to 285 persons. So, how is the average wage calculated? When the total labor force demand is 2,905 in the third year. In the software system, select labor bidding, click on bidding, click on simulation tools. We can use the labor force bid simulation tool to make a reasonable calculation, as shown in the figure. When our total labor force supply is 2,890, the average wage is $14,000. And when the total labor force supply is 3,210, the average wage is $15,000. Here we use the interpolation method to calculate the average wage. Applying the formula, 15 minus 14 multiplied by 2,905 minus 2,890 is divided by 3,120 minus 2,890 plus 14 is approximately equal to $14.1 thousand. Combined with the formula for calculating overtime, we can conclude that the increase in overtime is equal to 340 multiplied by 17% minus 270 multiplied by 0% multiplied by 14.1 is equal to $814.98 thousand. And we have previously learned that in the third year workers, the total demand increases by 285 people. So we can calculate that the increase in labor expenses is equal to 285 multiplied by 14. 1 plus 814. 98 is equal to $4,833.48 thousand. In the software system, select Government, click on View Data, click on Income Approach. We know from the GDP table calculated by the income approach that the sum of personnel expenses for all groups to meet the order production in the second year is $34,780,000. Then labor expenses in the third year is equal to sum of personnel expenses in the second year, 34,780, plus increased labor costs, 4,833.48, is equal to 39,613.48 thousand. When the labor expenses are finally calculated, what about the remaining capital requirements? Let's start the second calculation of iron ore spending. From the analysis of iron ore co-bidding techniques, we know that the total demand for iron ore is 10,000 tons, and the average price is $300,000 per 10,000 tons. So the total spending for purchasing iron ore concentrate is equal to 60 multiplied by 300 is equal to $18,000. The third VAT expense calculation, that is equal to sales tax on home appliances and automobiles minus input tax on iron concentrates. We know from the order bidding results that the total order amount in the third year is 20,800 plus 23,250 plus 26,640 plus 18,360 plus 14,580 plus 25,280 is equal to 128,900. and $10,000. And sales tax on automobiles and appliances is equal to total order amount 128,910 minus total order amount 128,910 is divided by 1 plus 17% is equal to $18,730.51 thousand. The tax on iron or powder is equal to total expenditure on iron or powder minus total expenditure on iron or powder is divided by 1 plus 17% is equal to 18,000 minus 15,384.62 is equal to $2,615.38 thousand. Therefore we calculate the VAT as 18,730.51 minus 2,615.38 is equal to $16,115.13 thousand. The fourth, advertising expenditure. We can calculate the total advertising expenses for the third year from the third year order bidding results. 1,000 plus 600 plus 600 plus 200 plus 300 plus 300 is equal to $3,000. The fifth, technology modification expense. According to our rules, each new production line can only be technically modified once, and with a maximum investment of $1,500,000. Since the land supply for the third year has been determined to be 200 acres, a maximum of 2 new production lines will be added. So the technical renovation is expected to be a maximum of $3,000. The last expense, minus usury and loans due. In the software system, select Performance and click on Balance Sheet. We know from the balance sheet that the amount of usury for all manufacturers in the second year is 0. In the software system, select Loans, click on Commercial Loans, click on Details of Bidding, Results, select the third year. From the commercial loan bid results to check the total amount of commercial loans for all manufacturers 3 years ago is $48,000. The second year and the third year need to focus on when the initial state loans are due minus inventory, commercial loans. Click on the corresponding loan amount. It can be specific to the loan term. What is the cash balance after the funding requirement is tallied? Does it affect the demand? Assume that the conditions remain the same. We can check the cash balance of all vendors in the second year from the balance sheet, and the total cash is calculated as $24,218 plus $26,559 plus $27,262 plus $25,978 plus $31,748 plus $4,360 plus $5,995 is equal to $167,785,000. At this point, the data we have calculated for each expense are substituted to obtain the total funding requirement for all vendors in year 3. Total commercial loan demand is equal to labor expenses 39,613.48 plus iron ore 18,000 plus VAT 16,115.13 plus advertising 3,000 plus technical renovation 3,000 plus usury 0 plus commercial loan 3 years ago 48,000 minus cash balance 167,785 is equal to $40,056.39 thousand. The total supply of commercial loans is $52,635,000, and the total demand is $40,056.39,000, at which point the supply exceeds the demand, and we can bid at the lowest interest rate. If the supply is less than the demand, will the low interest rate still give the loan? Assuming the conditions remain the same. Let's see who needs a loan. We can see from the order bidding results at the orders that each appliance car manufacturer received in the third year. From the graph, we can see that appliance 1 got 18,000 appliances. And after the capacity calculation, we can see that the production line capacity can no longer meet the orders. Capacity 15,000 is less than order 18,000. Then appliance 1 needs to grab land to expand the production line. So it needs a loan. How much loan is needed to add a new production line for appliance 1? We can calculate from the income statement that an existing production line to be used before delivery. 11,707 plus 300 plus 2,833 plus 1,000 is equal to $15,840,000. Plus the purchase of a new production line needs 10 year $0,000. Then the total investment required for a new production line is $15,840 plus 10,000 is equal to $25,840,000. From the inventory, we know that the current cash of appliance 1 is $17,572,000. If two production lines produce 13,000 appliances at the same time, then appliance 1 needs a loan 15,840 plus 25,840 minus 17,572 is equal to $24,108,000. So how much loan does appliance 1 actually need? We know that appliance 1 actually gets orders for 18,000 appliances. An existing production line produces 13,000 appliances per year, and $15,840,000 is used up before delivery. 18,000 orders for the third year. 2 production lines. And 1 production line needs to produce 9,000 units. So the actual money needed for 1 production line is equal to 14,840 divided by 13,000 multiplied by 9,000 is approximately equal to $10,966.15 thousand. Plus the funds needed to purchase a new production line and land rent. You can calculate the actual loan needed for appliance 1. $10,966.15 plus $10,966.15 plus 10,000 plus 1,000 minus 17,572 is equal to $15,360.3 thousand. Of course, this is the minimum loan amount. Thanks for your watching.